Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. Quick update. I've been super busy in my real life, but I still want to make a video anyway because a lot happened today in the market, and I feel like it could be a really interesting video. And I also want to plug my Patreon for reasons just like this. So it's basically $1 a month if you want to subscribe to my thoughts on a weekly or bi-weekly basis. Especially since I'm more on the go now, not really recording videos. I still put out content pretty frequently, not like every day or anything like that, but enough to the point where if something happens in the market, you guys can see exactly what I'm doing and what I'm not doing. Stocks I'm buying and just overall technical analysis or other deep dives on certain companies, whether they're dividend growth or growth companies, etc. So pretty much just all my thoughts, as I mentioned. So I'm gonna plug that. I'm not really doing it to make money, but it's just like a side thing that I'm kind of passionate about. I'll leave a link down below if you guys want to check that out. I just had to get out of the way just because, as I mentioned, a lot happens in the market these days, and I'm not always around to make videos. All right, cool. So what happened today? So early in the morning when I was actually asleep, funny thing is I've actually been taking some medication for my cough lately, and it's been causing me to wake up at weird hours. But today is the one day that I actually managed to go back to sleep when I did wake up at a weird hour. So I didn't actually catch as much of the dip as I wanted today. Of all days, like literally, I've been waking up at like 6 or 7 a.m. like every day for the past 2 weeks, except today, of course, when the market is actually down quite a bit in the morning. But anyway, so I managed to take advantage of a little bit of the dip. Did a lot of buying actually. I didn't have a ton of cash available, if I'm being honest. And I was taking just a little bit of profits like a couple weeks ago, but not really enough to like be super excited about today. So it's not like a huge opportunity day. I did manage to move some stuff around in my portfolio. So some positions that I was up on or not really that passionate about, I managed to move them into some more growthy type plays, which I'm actually going to talk about in this video. Last thing I'll say before we jump into the charts is one thing I hear about real estate, which is actually getting way more interesting lately, by the way. But one thing I hear about real estate is that the profit is always made on the buy, meaning that it's much, much more important to get a good opportunity when you buy a property, and you want to buy something obviously below market value or just something that's undervalued. And that's when you make the most money, right? So it's a lot of upfront research. When you actually make your purchase, then everything leading up to that point is going to basically dictate whether that was a good buy or not, which is a little bit different than the market according to real estate folks, because the idea according to real estate folks is that you don't necessarily know like what the intrinsic value of a company is. And so it's a little bit less tangible, I would say, which is kind of why I like the stock market a little bit more, because it has its own like kind of rules and logic. But anyway, this idea has been more popular with real estate, which is you make money on the buy, but I'm realizing it's extremely, extremely relevant in the stock market as well. And it's not really like a mainstream idea, I don't think. But yeah, like I'm realizing how much money, especially going forward in terms of working on my new strategy, like how much money is made on the buy, right? And we'll go ahead and start talking about what I mean now that we're looking at the charts. All right, so as I mentioned, kind of a crazy day. You can see just how large this candlestick is because that's how much of a range there was today. So from peak to trough, it's about a 3.5%, 3.5% range, which is actually pretty high, especially lately. Take a look at these candlesticks over here, leading up to this drop, and the market barely moved on these days, really. So nice to see some volatility back in the market. Volatility breeds opportunity. And so, yeah, essentially what happened was, let's go ahead and take a look at an hourly time frame. So essentially what I was really looking out for was this 200 period moving average on the 1 hour time frame. If we can't hold this area, it generally tends to create even more volatility. And so what happened here, actually, this last time we hit this area, which was here back on January 29th, I thought we were actually going to break below it because, as you guys can see, once we got below it a few times, we tried to get back above it, and then we printed this candlestick, which was on the Friday, I believe. And this wasn't like the nicest looking candlestick, so I was kind of bracing for a drop. Fortunately, we did make a higher high. I was able to take just a little bit of profits again, not as much as I'd like to have, but still took some profits, and then we retested this range again. But this time around, we actually got below it by quite a bit, tried to get back above it, got rejected, and then just printed a really nasty like formation to end the day. And then this morning, nasty, like really, really nasty gap down. But it looks like we filled the gap, which is good. So it's not going to act as resistance that much anymore. Obviously, we're pulling back to end the day, but that's pretty much what happened. And so, yeah, as I mentioned, this is like a pretty important area, a pretty important moving average, because whenever we do go below it and can't really reclaim it, then it tends to create more volatility, as I mentioned. And so if we go before that, this was basically the March crash when everything just went to crap. And so, yeah, obviously this was a pretty important area leading up to here. And so, yeah, so obviously this is like this is always the first thing I check is where are we relative to here? And so we haven't actually got back above this moving average. And so because I think this is so key, I'm not necessarily like saying, okay, the Bulls have won this battle yet. I want to see us recapture this first. And so I'm not making any predictions right now. I'll just say that today was a really good day in terms of a recovery, but it doesn't mean we're out of the woods yet. Let's go ahead and take a look at the 50 and 100-day moving average, which are actually my favorite for sort of a mid to long-term time frame. So the good news is we did manage to recapture the 50-day moving average. And honestly, this is a really nice looking candlestick. I'm not going to lie. It's like a nice bull hammer. And we got relatively close to the 100-day. And so a lot of buying pressure started coming in here. And so, yeah, so this is actually the theme, is a lot of stocks kind of recaptured a major moving average today. If we take a look at Apple, for example, which is such a huge chunk of the market, we actually got slightly below the 100-day moving average and then recaptured it to sort of end the day. And so I did manage to buy the dip on Apple. But the point I'm trying to make is that we did recapture some major moving averages on a lot of major stocks, so that's good. But on the flip side, as I mentioned, we need to recapture this area. The other thing I want to mention is that the dark pools buying index is actually not that impressive. And so there wasn't that much buying today in the dark pools. If we take a look at the equity put to call ratio, it's actually been pretty low for a while now. So not necessarily the kind of, spikes of fear that you want to see. The higher this is, the more puts relative to calls that are being purchased. And so, yeah, as I mentioned, it's not really that inspiring, I would say. And if we take a look here, if we look at a daily time frame, the area that we're coming off of, and the reason why I was kind of like cautious this whole time and not really doing too many purchases up here is because very traditional overbought signal, just percentage above the 200-day moving average. We hit about 17, and this is kind of an area where I want to start taking off some profits. As I mentioned, I did take off some profits, but I was planning on taking more if we continued higher. Why is this such an important area? And that's because generally anything above, like, let's say 15 is actually pretty extended. So leading up to the March crash, it was about 16%. And then up here in January 2018, when things kind of went parabolic, we were about like 14%, right? And so this was considered a pretty parabolic move relative to this time period. We hadn't really seen anything like that. And then imagine this, then we got another sort of parabolic move back here in February 2020, where it was about 16%, and then we actually exceeded that here, which made it about 17%. And so it seems like the market is becoming more comfortable with being overstretched, I would say. That doesn't mean that all risk is out the window. It's just kind of have to play a little bit more flexible. At the same time, we have to respect these levels, right? Because if we had taken a look at this and at any point we started to take profits when the market exceeded about 16%, we would have been able to buy shares at a lower price today. And so that's something to keep in mind, is that, if you start taking profits when it starts hitting like 15, 16, and it keeps on going up, then that's okay, right? You can keep on taking more profits, and then if there's a correction, obviously that's a good time to add. The question is, like, what happens now? Like, was this a big enough drop to kind of reset these long-term overbought signals? I think it's a good start. I like that we corrected, but I'm not really making any predictions right now. And yeah, sorry to break it to you guys. I know usually, like, I'm okay with making predictions, but right now things are just kind of unclear, I would say. All I'll say is this is I'm only going to be buying. So I did buy a little bit this morning. I'm only going to be buying as we head lower. I'm not adding to any positions right now. And if we do make a higher high, I'll be looking to take more profits and kind of repeat this process. And so when I mentioned earlier in the video that most of the gains are made during drawdowns, the funny thing about the market is that like during drawdowns, like I think we can always assume that the market's going to make a higher high at some point. And so it's kind of like safe, I would say. I'm going to put air quotes around that. It's kind of safe to buy stocks during drawdowns, and we should feel a lot safer about that. And as the market's making all-time highs, and we start to hit these overbought signals, then those are kind of the opportunities to start taking profits. And if you don't have any cash, and something like this happens today, then that, like, what good is holding through all this, right? If you can't really take advantage of these dips. And I remember before I used to struggle with holding long enough, and so I think at this point I kind of held a little bit too long. But regardless, I think I'm sort of figuring out how to take advantage of. There's really only a few things the market can do, right? It's either at all-time highs and it's continuing to head higher like we are now, or during drawdowns. And it's kind of a matter of like fine-tuning what to do in these moments. And I think I'm getting closer and closer to figuring something out I'm comfortable with. But anyway, that's just, I shouldn't get into it too much. All right, so let's go ahead and take a look at what I was buying today. So first on the list is Apple. So I got relatively close to 100 shares at about 85 shares. Recently just started buying this position, and then we started to dip below it, and so I started to average down. So I'm currently down about 3.69%. As I mentioned, this is a pretty decent look. I love the fact that we're pulling back from this all-time high level, and the candlestick we made today is actually pretty good. And so if Apple, which is the largest stock in the S&P 500 and the NASDAQ, if this stock looks good, then I think we can feel good about just the overall market in general. And I would say like a lot of the leaders look pretty good. Like Apple looks pretty good, but obviously like Netflix looks really, really good right now. Like I'm loving this. I have about a few grand in Netflix, I believe, and so yeah, I'm loving this. I think Microsoft is pulling back from a recent breakout of this consolidation range. So I think I talked about this on one of my videos that Microsoft was sort of consolidating, and so broke out of this, and now we're retesting the range. So I think this looks fine too. So yeah, I mean, it's good to see the market leaders looking somewhat good and not like super extended. Now let's take a look at some of the more interesting companies, because I've made videos about like large cap stocks that I'm buying, which isn't really super interesting. Now let's talk about those hyper growth companies that could potentially 2x and 3x in like a year or two. So first on the list, I'm going to go with another technology company. It's called Fastly. So from a technical perspective, it's actually not particularly inspiring that we broke below the 200-day moving average. Even though this is a consolidation range, especially after this big move, we would at least hope that it would hold the 200-day. Not the end of the world though. I kept on buying around here. Just taking a look at a weekly time frame, holding up above the 50-week moving average. And so, yeah, pretty much what happened with Fastly. So it IPO'd here in 2019 of May, and then kind of had this during the March 2020 crash, and then just had an amazing run up. And so now we're sort of consolidating back and forth. So taking a look at Fastly's financials, Fastly is currently in a hyper growth phase. And so you won't see really great numbers as far as net income goes, but the revenue is growing pretty quickly. So Q3 grew by 40%, Q2 grew by 60%, and we obviously see a decrease in quarterly revenue growth from Q2 to Q3. I don't think this is such a big deal though. And then Q1 2020 up by 38%. So that's pretty much 3 quarters in a row with close to 40% revenue growth. And then right here, Q4 2019, we have about 44% revenue growth. So that's about 4 quarters in a row, 40% revenue growth. And if we take a look at what Fastly actually is, so a lot of people don't know what CDNs are. CDNs are content delivery networks. So basically, when you have an application and you want to host it on the cloud, especially if there's a lot of visitors to that application, it's of the utmost importance that your latency is amazing, your response times are amazing, that it's secure, that you can monitor like just statistics about visitors and stuff like that. And so this is an entire ecosystem. which is fulfilled by CDNs, which are like kind of like distributed servers. So the other thing that's important is that like if you're hosting a website and you want people in the United States to look at it and people in England to look at it, for example, you can't have any delays and latencies, regardless of where you're looking at it from. And so you can use a CDN to kind of help you with this. And Fastly actually provides solutions like from end to end. As far as exactly what you would want out of a CDN, so like load balancing, which is like, for example, if you have visitors coming to a website and you can't really anticipate like how many are going to come at a certain time, you want to have something that can auto scale the amount of resources. And so like, if all of a sudden your website usually gets 100 visitors per day, but then like one day they get 1 million visitors per day, it's not okay if your website like stalls or delays, right? So that's what a load balancer can help with. And especially if you're working with like images or video and streaming on your website, then Fastly can help with that as well. So if you're a company like BuzzFeed, we could take a look at some other customers as well. So customers such as Yelp and Shopify and Imgur, obviously all deal with images and or videos. I have no doubt that Fastly can secure more of these primetime customers. And the great thing is that since these companies are happy with Fastly's service, you can basically charge like on a recurring basis. And you can obviously sell more products and services on top of that. Fastly actually recently acquired a company which is called Signal Sciences. And so you can now upscale some of their customers on cybersecurity services. And so, yeah, that's one of the great things about Fastly's business model. So anyway, long story short, I'm buying Fastly down here. If we take a look at my position, so I'm currently down about 4%, but I have about a 5.8K position on Fastly. Average cost at about $81, 75 shares. I'm probably going to get 200 shares at some point in the future. All right, next company I started to take a look at is Crispr Therapeutics. So Crispr right now kind of lost the 100-day moving average, but anything between this range, between the 100-day and 200-day moving average, I think is a pretty good place to buy. 52-week high sits at about 220, and it's just been absolutely pummeled ever since about the start of the year. Actually, around January 14th, it's been pummeled. And the same goes for a lot of these other genomic stocks as well. I think so this video doesn't get too long. I think I might just combine all my genomics purchases. So CRISPR at the top of my list, definitely bought more today. Invitae I bought a lot more of as well. So I'm pretty much doubling down on CRISPR. I'm doubling down on Invitae. And this one just looks fantastic. Bounce off the 200-day moving average. Really nice looking candlestick actually, especially after consolidating here. Kind of reminds me of this time period where we kind of had like a head and shoulders, and then once we broke below the neckline, that was sort of the signal to go long there. And so head and shoulders again, broke below the neckline, and we'll see if this is the bottom. But for the most part, it was good enough for me to start buying. The other company that I started buying a little bit more of is actually Twist Biosciences. So once again, absolutely pummeled since January 14th, January 20th, around that range. And 52-week high currently sits at about 212, price at around 135 right now. And so what I like to see, honestly, is like with these genomic stocks getting pummeled since the middle and start of January, since it's consistent across the board, it kind of gives me a little bit more confidence to say that whatever is happening to the genomic space is a little bit systematic and not necessarily something that's happening with any individual company. For example, if you're looking to buy a company and the entire sector is down, it's kind of a good signal to say, hey, maybe money just rotated out of that sector, and it's not necessarily anything wrong with that particular sector. And that kind of happens all the time, right? There's sector rotation all the time. Like I think XLF and the financial sector is already back to being fantastic right now. And so yeah, I think XLF, which is the financial sector, actually made an all-time high. And so sector rotation happens all the time. Even though I don't like XLF, I can at least admit to say that a lot of the issues that they were having here, it's not necessarily anything wrong with this sector necessarily, right? Because the big banks aren't going away. It's just like there's just more exciting places to be. Like if we compare this to like PayPal and Square, like you can obviously see a huge dichotomy between those two. But yeah, anyway, so when the sector is sort of acting a little bit rough, I would say, then it gives me a little bit more confidence to say, okay, I think this is something I want to get into. And so yeah, those three companies I started buying a lot more of. Let's go ahead and take a look at my position. So Crispr, I'm currently down about 5% on, have about a 5.4K position. 40 shares, average cost at 142, so it's not too far away from where we're at right now. Let's go ahead and take a look at Invitae. So currently only down about 2% on this one, close to a 4K position, average cost at 44.39. So once again, not too far from where we're at right now, already up after hours. And then Twist Bioscience, I'm actually down the least, down the most on this one, but it's actually my smallest position, and probably like out of the three, I like this one maybe the least. But anyway, so about 20 shares, average cost at 153. I think I might average down a little bit, get it to 3K position, but beyond that, I'm not actually sure. So that's the third on my genomics list. And the last company I'm going to talk about today, speaking of sector rotation, is actually a 3D printing company called Proto Labs that I started to double down on for sure. So this is ticker symbol PRLB. So actually a lot of the 3D companies, if you take a look at 3D Systems, for example, there was like a really big bubble here in 2014. And then all of a sudden, since the start of 2021, a lot of these 3D printed companies started to rally quite a bit. But now they're starting to pull back, especially since the start of February. And so I would say there's probably maybe three interesting 3D printing companies. And so obviously you can pick whichever one you like the most. For me, I'm sticking with Proto Labs. And so, yeah, they all look pretty similar. Like they all had a really strong rally. And then they started to pull back a little bit. And so Proto Labs is basically retesting the 200-day moving average earlier today. And so let's go ahead and take a look at my position. So I currently have close to a 4K position, down about 4%, average cost at 162. Yeah, not much more to add to that. So I think that's where I'll wrap up the video. Hopefully it didn't get too long, but yeah, so basically long story short, I did double down on some of these hyper growth names. I think some of them have like 2x, 3x potential in the next year or two. And so the position sizes are not huge, but they're not small either. Something like 3 to 4 to 5,000 is like a pretty, it's a decent position. It's a decent size in my portfolio at least. So I can't say it's nothing, but at the end of the day, I'm still pouring a lot of my bigger buys into large cap tech, and yeah, just kind of see where things go. So anyway, thank you guys for watching, and I'll see you guys in the next video.